Welcome to the Child Care Genius Podcast, the world's leading authority on child care marketing, mindset, expansion, and profitability. Our host, Brian Duprey, is the world's most sought-after child care coach, having helped tens of thousands of child care owners from around the globe take their business to the next level. Let's welcome to the Child Care Genius Podcast, our host, Brian Duprey.
Hello, everybody. Thank you for tuning into the Child Care Genius Podcast training series. I'm your host, Brian Duprey, along with my talented, beautiful, and amazingly stunning co-host is Carol Duprey, the love of my life for the last 32 years, and hopefully for the next 102 years or however long I shall live. I'm such a lucky guy. Not that you guys need to know that, but I am blessed. Anyway, we're going to talk today a little bit about tax strategy, how to save some money. It is almost the end of the year. It's almost the end of 2024. And we're going to talk about how to save some money on your taxes. Who likes to pay taxes here? Nobody likes to pay too much. We all like to pay our fair share, but just not a penny more, right? So let's talk about what we can do to save a little bit. And the first thing we're going to talk about is documentation, like tracking everything in, like getting a receipt and counting everything. You know, I'm pretty stickler about receipts, aren't I? I do the financials in our company, and I'm always looking for receipts. My daughter spends, my son spends, Carol spends, I spend. I'm the only one that's 100% perfect on receipts. Carol's about 98%. Our kids, on the other hand,
I buy everything online, so I can.
so there's a receipt. That's a good point. Yeah, then you got documentation. But the secret is to make sure that you claim everything that is actually business expense as a business expense. You buy a pencil for your daycare. Don't buy it with personal funds. Buy it with corporate funds. Keep your business, personal and business expenses separate. Have a separate credit card. Only use it for business. Just make sure you get every possible deduction known to man.
And if you do buy something with your personal money, reimburse yourself from the business and keep the receipt and write what the check was
Yes.
for reimbursement.
You can even do that once a month. Just write a reimbursement check with all the receipts, staple the receipts to the reimbursement check, and pay yourself back perfectly legal. Let's talk about the next one is vehicles, use of your vehicle. And when you're using your car to go get supplies, go to the store, get groceries, food program, things like that, you can deduct the mileage. And the amount varies year to year. It's 60-something cents per mile this year, which is a good amount of money reimbursed to you if you keep track of those miles. And there's two ways you could do it. You could either have a company car that is owned by the company that you depreciate with the company, and also you don't have to track miles with this. Every expense, you can get your gas, your insurance, your registration, taxes, excise taxes, everything can go against that charge. And the company would own the vehicle, and everything on that car would be a company expense. Oil changes, all maintenance, everything. Or you could do mileage. You could do one or the other, but not both. And just you want to look into the IRS rules or talk to your accountant on what's legal. The secret is to make sure you claim every miles that you drive as a deduction. Carol, what's the easiest way for them to track mileage if they use the mileage approach?
I have an app. I think it's called Mile IQ. And when I drive, it just automatically keeps track of how many miles I drive. And then I have to go in and say if it was business or personal, and what I was doing for business. So it's
So at the end of the trip, you could swipe business or personal,
Yeah.
right?
Yeah.
So it's pretty cool. GPS tracks it, logs it all, and much easier for the IRS. You could download the information into a PDF. You could do that monthly if you wanted to, or at the end of the year, you could just do one download of your information and pay yourself. You know, you could write yourself one check at the end of the year for your mileage for an entire year, but the IRS does require you to keep records. So if you ever were to get audited, you've got to justify that mileage spend. So it's good to keep track, and this app will actually keep track of your mileage for you, which is good. Another thing you want to think about is accelerated depreciation. If you bought a building or properties in this year, talk to your CPA about maybe accelerating some of that depreciation so you could save money on your taxes. If you bought your building that you own or a daycare property, as long as it was a building and not just land, you can accelerate some of that depreciation in 2024 and be able to offset some income. So check on that. The last thing we want to talk about is end of the year. So the last week of the year, we tend to look ahead at what we could prepay into 2024 or into the next year, rather 2025. You have maybe some things that you could prepay, your electric bill, your rent for next month. What can you pay in 2024 and still claim in, or what can you pay ahead in 24, which is actually a 25 expense, and get the deduction this year? So there's certain things you could do legally and certain things you can't. Check with the IRS, check with your accountant on that. But look for things that you could prepay now. Maybe you look at the food you were going to buy 2 or 3 weeks into January, and you buy it all the last week of December. Go on a buying spree, stockpile some stuff you'd probably use in January, and we get the deduction in December. There's another trick. If you pay your employees every 2 weeks, there's a trick that I've employed a couple times where sometimes you have one payday week falls in one year and another payday week falls in another year. If the both paydays, they work in 2024 but don't get paid till 2025, you could actually back in an extra 1 week payday in 2024 and just change the weeks, or just give them 2 1-week paychecks in a row and then go back on a 2-week schedule. That way you're getting an extra 1 week payroll in before the end of the year instead of paying them on to next year's. This is only if you do cash accounting. If you do accrual-based accounting, you're capturing the paydays in the proper years. But if you do cash-based accounting, you could be able to capture some of that to a 2024 payroll that was worked in 2024 in 2024 instead of waiting till 2025. Talk to your CPA or accountant. It's very complicated, but these are tricks that Carol and I have done over the years to save money on taxes. Anything else?
Well, we've also done things like, one time we had a furnace that we were going to have replaced. So we paid a bunch of money to the furnace company, knowing that we were going to have to spend that money in a few months.
Yeah, if you have big expenses, now is the time to get them done. Go to Home Depot, pay for projects that you need to get done, and they can get them done in early 2025. So again, it's just, thinking ahead of the tax man. If taxes were going down in 2025, we'd want to push income into 2025, but we want to try to take as much, we want to save as much taxes in 2024 as you can. The taxes should be the same 24 and 25, so there's no advantage here. So I hope this helped. We look forward to seeing you on a future podcast. Go to childcaregenius.com/resources, and we'll be happy to help you out. Have a great rest of your day.
Thank you for listening to the Child Care Genius Podcast. If you enjoyed the show, please do us a favor and hit the subscribe button so you don't miss a future episode. Don't forget to visit our website at childcaregenius.com to see a list of services we offer to help grow your child care business. Until next time, thank you for being a part of the Child Care Genius community.